Hello, everyone. This is Travis the Trader coming back to you live on Wednesday. This is September the 18th. This is actually the day that the Federal Reserve, for those of you who have been following this news story, the Federal Reserve reduced interest rates by 50 basis points. And what that means, how is it going to impact this, that, and all the above? Again, we all have our theories and basic economics behind us, but again, no one really knows what lies in the future. And one of the products that I wanted to talk about, one of the investment vehicles I wanted to talk about is /ZT. ZT is the 2-year Treasury note. When you think of short-term notes, your short-term interest rates, this is it, ZT, /ZT. Overall, I have traded this before. As you can see, its IV rank is relatively high. It's 55, 56. It is pretty liquid. The problem that I would have with this right now is if you look at the IV, the monthly IV on this, it's 5%. Or if you continue going out, I guess we're in somewhat of a backwardation here. It just gets lower and lower, 2.5%. I'm saying about 2.5%, October, November. Not something maybe I would put on right now. Just wanted to talk to you about this and kind of let you know what some of your options are out there. It is, I would view this as a big product or a big boy product, meaning that one contract, a /ZT of the 2-year Treasury note. I think it's about 100. It is 100,000. If anyone knows different, please let me know. I'd love to hear from everyone. So you're looking at a notional value, I would say, of about 206, maybe 207,000. It's quite a lot. So I would strongly recommend, strongly suggest that if you are going to use this product, please, think about what it is that you're doing, of course, but think about obviously the size of your account. And maybe just to try it out, maybe look at doing some kind of a defined risk, maybe some type of a spread, put spread, call spread, if you're directional, of course, or if you're delta neutral, maybe putting on an iron condor. And again, I'm introducing this to you because, again, it's a way of further diversifying one's portfolio. It's always good to have a little bit of everything should the market go up, down, sideways, whatever it is. So keeping that in mind. The other thing is, if you feel that you're just not ready for futures, there does happen to be an ETF, SHY. But again, I'm not too crazy about this either. SHY, by the way, for those of you keeping track, is the 1 to 3 year Treasury note or Treasury bond ETF. Not sure why they're saying it's a bond when anything less than 10 years or less is a note. But neither here nor there. The ETF also not terribly great. I know the markets are closed, but it's just not tradable. There's not a lot of liquidity. The bid ask on these things is pretty wide. If I just look at this, it's 3 stars. You're just putting up a lot to get a little. Like if you go to the 83, you're getting 15 cents for putting up about $1,700. Not really a great return on capital. It looks like /ZT might be the best way. For those of you who wanted to trade the micro, there are micro 2-year yield futures. The problem is there's no options on them. So you'd have to just either buy or sell the future straight. The other thing I wanted to mention is that what is it that you're buying? You're buying the futures, but it's based on the yield, right? It's based on the yield of the 2-year note. It's not the price, it's the yield. So obviously when yields go up, prices go down. Prices go up, yields go down. So in this case, the last price was 3.56. So that's 3.5, let's just call it 3.5%, is the current 2-year yield, is the 2-year note, is the yield on the 2-year note. Say that a couple times, right? So just keep that in mind moving forward. And again, I know I mentioned this to you before, but I wanted to just, and I had uploaded a video about this. We are currently in a normal yield curve. And the way we know that, again, is that the 2-year note, 3.5%, the 10 years, 3.6, the 30 years, 4.3. So as you get later and later on the curve, as you're moving ahead into the future, the 30-year is higher than the 10 and the 2. The 10 is higher than the 2. So the opposite of that would be the 2 is less than the 10 and the 30-year yield. Again, say that many times over. I wanted to share this with you. Again, it's just a way for you to recognize of all the different products, in the market. And over time, I will be going over some trades when it comes to interest rate futures because I think it's very important in having a better understanding as to how to actually apply what it is that we learn and use it in the real world here. Again, I'm here to help you become not just a better trader, but to be a better decision maker as well. And for those of you that did find value in this, please, I hope you will subscribe to my channel so I can continue to put out not just good content, but that the gods, I guess, the YouTube gods, with all its different formulas, will give me more access to you guys. And of course, please, thumbs up always helps. And of course, I look forward to seeing everyone in the next video.